תודה רבה לגיא פרמירגר. אני רוצה להציע לכל מי שיושב שפשוט תצטפפו לאמצע ותאפשרו למי שעומד לשבת, ואז כולנו נהיה יותר מרוצים. כאן יש מקום, כאן יש מקום, כאן יש מקום, כאן יש מקום. תשבו בנוח, תרגישו בנוח. הדובר הבא שלנו הוא ג'רמי גלייזר מחברת עורכי הדין מינץ לוין, חברה אמריקאית. הוא הסגן יושב ראש של קבוצת ה-VC באותה חברה, הוא יושב בסן דייגו. הוא יספר לנו על מגמות עכשוויות בתחום ה-VC, בתחום השקעות ההון סיכון בארצות הברית. ג'רמי, please.
Well, thank you very much for having us. My name is Jeremy Glaser. I'm the co-chair of the VC practice at Mintz Levin. And just a quick little short commercial about our firm. For those of you that do not know us, we're a firm that really has been built around serving all the needs of the growing high-tech company. We work with early-stage companies to get them through the funding cycle, whether that's a venture financing, a public offering, and then more and more these days, as you're going to see, the IPO exit. We've been involved working with Israeli companies for over a decade, and we also have a liaison office here with our business development person, Yael Biron, who I think many of you know, who's been here for about 10 years. And we thank her very much for helping us get involved here with the MIT Forum. I'm going to quickly just put up some of our representative clients. You can see that we have a very broad practice here in Israel, and we obviously really love working here with Israel and Israeli companies. Already talked about, we do a lot of venture capital. I want to just really jump more to the statistics right now, because I think this is what's really interesting, what's been happening in the VC market in the U.S., and just from what I was listening to here with the prior speaker, it sounds like it's pretty similar here in Israel. As you can see, we had a significant increase in 2010 in both IPOs and M&A, but what's really fascinating, take a look at the numbers in 2008 and 2009. These were really, really dry years and the after effect of the financial crisis. And as you can see, we had a dramatic increase now in 2010 in IPOs, but even more interestingly, in the M&A exits. And as we all know, exits are the key to successful venture capitalists. While the VCs here in the audience, they love technology, what they really love is making money. And without the exits, they don't make money. So this is really good news to have this really, seeing this back. Now you're going to see, unfortunately, there's going to be a bit of a lag. So this is the actual dollars raised by venture capital funds going back to 2005, the number of funds and the amounts raised. So even though we've seen a pickup recently in the exits, as you can see, the fundraising is continuing to go down. Now, I'm going to go out on a limb here and make a prediction, but I think in light of what we saw in 2010, I'll be very surprised if we don't see these numbers going the other direction. Maybe not in 2011, but certainly in 2012. I could just tell you that some of the VC funds I work with had very strong years in 2010 with exits. And that's going to translate into their ability to go out and raise the new fund that they've really been waiting for many years to do. So I think we're going to see this trend reversing, which is really good news for the whole industry. This is an interesting slide as well, just showing sort of the breakdown in sort of early stage versus middle stage and late stage investing. I think there's been sort of a misunderstanding. I think people have taken the view that there's not a lot of money available for early stage companies. And if you actually look at these statistics, that's just not true. In fact, there's continued to be quite a bit of money both at the seed stage and the early stage. And in fact, it's the later stage on sort of a relative basis that's been suffering. So I think this is, again, really good news for entrepreneurs that don't get frustrated. Even though there's been some shrinkage in the VC funds available, they're still funding early-stage companies, and I really do believe that we're going to have some much better times coming soon. We're going to have fresh capital to invest. This is a breakdown of the areas that the VCs have been investing in the U.S. And again, some sort of interesting statistics from my perspective. As you can see, IT has generally been increasing. Obviously, the 2009 time period was a bit off, but IT has really stayed steady as a percentage of the total investments. There was quite a swing in the clean tech space. Everybody got all excited around clean tech. There was a big push for clean tech and a very large increase in 07 and 08, a big fall off in 09, as you can see with the green bar. But it came back, again, as a percentage of total dollars. So I think that's also a good sign that there really are opportunities in the clean tech area that are for real and weren't just a bubble. And then biotech certainly off a little bit, but still continues to hold its own. The last trend I want to talk to you about is really this sort of interesting new trend, but like all new trends, it's sort of a back to the future. If you remember, in 1999, 2000, we saw these enormous valuations for internet companies. Well, guess what's happening in 2009 and 2010? We're seeing these internet-based companies having enormous valuations and enormous fundraisings at incredible increases in valuations. So here, just real quickly, you can see Zynga from $10 million in 08 to raising $200 million in July 2010 from Google. Twitter, $4.8 million in 07. Their last raise was $200 million on November 17th, 2010. Again, just incredible valuations. Facebook, you've all been following that recently in the news. You've seen the dollars raised. $12.5 million back in 05. This current financing, $500 million, valuing the company at $50 billion. Quick show of hands. Usually VCs like to invest sort of with like a 10x return, right? You've heard that? They want to make a 10x return, right? Who thinks the investors in Facebook at $50 billion are going to make a 10x return? I agree with you. So it says something about what's really happening with, quote, technology investors, early stage investors. And I'll share with you at a program I was attending in California about a month ago. I won't name the firm. It's a very prominent firm. They had a partner up there who used to invest in earlier stage companies, talking about how they really only want to invest in these big companies today and all of his reasons for it. But I think the returns are going to suffer. Thank you very much for having us. I think this is going to be a really interesting program, and we appreciate you allowing Mintz Levin to be part of this program today. Thank you.